Our first guest says he's looking for a position in the energy sector, but he actually is okay with that. Crude oil at 43.41 right now. We're off to Chicago. We're speaking with the man behind Path Trading Partners, Bob Iacchino. Good to see you again.
Good to be here, Michael.
Okay, so you don't own oil at this point. Let's talk about why, and as it relates to, I suppose we should say, the situation going on in Saudi Arabia. First, let's get that angle. What do you think of them replacing the man at the top of the oil ministry?
Well, I think it's a little bit of a surprise the way it happened, but I think really it has to play out. It's very difficult to have an opinion on this. I think what speculators in the oil markets don't really realize is that there's a war on oil, or a war of oil, going on between Saudi Arabia and Iran since the nuclear deal was passed in the U.S. here with Iran, or with rather the consortium of nations passed a nuclear deal with Iran, and that was another bit of a Western slap in the face to Saudi Arabia. So they're going to pump at capacity regardless of who's in charge of the oil ministry, and they're pretty close to capacity. They've probably got another 500,000 to 1,000,002 barrels that they can pump if they need to, and they'll do that, and they'll continue to do that as long as this war is going on with Iran. I think what this change does is it sort of ups the emotional level and ups the rhetoric between those two countries, because the previous oil minister was a little bit more reserved, if you can believe that, looking at some of the past comments. So we have to let this play out, but I don't think it changes much in policy at all.
How long does it take for something like that to play out?
I'd give it about 3 months, maybe 6. You know, it's kind of pulling time out of the sky, but there'll be some comments right away. I think one of the things that caused this switch was the potential cap, which I thought would happen between Saudi Arabia, Russia, and some of the other producing nations, and it didn't happen mainly because the royal family said, we don't want this to happen. We're at war with Iraq. I'm paraphrasing, of course. So I think that's part of the reason this switch happened. So I expect the rhetoric to ramp up pretty quickly. So we're going to know pretty quickly what that rhetoric is going to look like. But in terms of policy, it hasn't changed, and it's not going to change. They're going to continue to pump all out.
So while we can't seem to do anything about the supply side of the equation because of this game of chicken between Iran and Saudi Arabia, if you suggest that maybe 3 to 6 months down the road that resolves itself, is that more because the demand side is expected to climb as we move into the fall and into the winter?
Well, the demand side has been climbing very slowly. We expect it to continue to climb. I think the global economy is going to improve very, very slowly. So we see that demand continuing to ramp up based on that very, very slowly. So it's not going to be a screaming market. We're not going to get back to $109 by next month or anything crazy like that. But what we do expect is for that supply and demand to come back into alignment. You're seeing with the fires in Alberta, and my heart deeply goes out to everyone affected by that, but you're seeing with that what 1 million barrels a day coming offline is doing to the market, and it's virtually nothing. People look at that as a temporary thing. That's the speculators. People involved in the physical oil are worried about it. They're worried about damage to pipelines. They're worried about how quickly it can come back online. And then, of course, U.S. production continues to drop off as we stay below the $60 number. So I think that oversupply is going to shrink. It's going to shrink slowly, but it is going to shrink. So I'm still looking for $55 in oil, but I think in WTI specifically, but I think we can see 40 and possibly 38.50 before that. That's where we'll look to start getting long the actual commodity.
What's behind the magic number of $38.50 as an entry point for you?
It's really a mathematical target past my base. So my base is around $40. That's where I think it's going to go to, given the last few days of price action. 38.50 is a mathematical extension of that, where you see some panic selling come through psychological levels. To me, $40 means nothing except that it's a penny higher than $39.99. That's really all it is, but it ends up being psychological levels, so we expect a little bit of a blast through there. We'll start getting in at 40, but we'll hold through all the way down as low as 38.50.
Why the commodity? Why not the stocks behind them?
Because of what you mentioned actually pre-intro, Michael, when you talk about where their cash flows end up, how long are some of the companies, this applies to the U.S. as well, what's their cash flow like? When do they go into bankruptcy? When do they get acquired? With oil where it is, there's a lot of variables that I can't begin to predict. So when it's like this, I want to be just in the commodity. In terms of the equities themselves, if you were looking at things, you want to buy the higher dividend payers, stocks like Exxon.
Good to have you with us as always, Bob. Thank you.
Good to be here, Michael.
Bob Iacchino, co-founder and chief market strategist at Path Trading Partners.